Okay. Hi. So, are you all there? If you're there, can you just acknowledge by saying hi? Okay. Sorry about the video quality, but I think this would do. I I just realized that it might have worked better if we had used Hangouts, Google Hangouts. But then again, there are a lot of people who apparently have not logged in or unaware of how to use Google Hangout, so I had to improvise and use this makeshift screencast instead. Okay, so are you all there already? Let's give everyone maybe another 5 minutes. So we'll do a quick run through on the key concepts today, and then don't forget the face-to-face appointments, and need my email address once more. Just think of my email address if you need to make an appointment to see me. So the date already have been confirmed. So that will happen on the 4th of July. So those of you who are coming down, you have all been informed. So let's just give it another 4 to 5 minutes. We'll start in a while. If you need the link for the OneNote, should I give you that? Okay, let me give you the link for the OneNote. Okay, so I'm not sure whether you can see that, but I'll just type it out for you if you are if you have not if you're not able to see it. I think the resolution is quite acceptable. Okay. Here's the link for the OneNote. Yeah, I think the next time we should do this on Google Hangouts. The resolution is a lot better than this. Okay. Yeah, I think we can begin anytime already. Are you all able to hear the audio? Is it clear enough? Yeah, but just for information, the recorded video would all be uploaded on my YouTube channel, so it will be there anyway. If you missed it, you know, if we will of course have a 5 minute break in between, yeah, and then that would be like roughly 1 hour. So we'll take maybe about 2 over hours for this revision session. Okay. Okay, we still have 2 more minutes. Okay. Mm-hmm. Right. You can start anytime soon. Okay, I think we'll start. So let's not wait anymore. Right. In any case, the video will be live, and then a copy of it will be saved on the YouTube channel, right? Okay, so let's begin with the revision. So a few things to go through. I hope that you had a look at the uh, PowerPoint, right? So you can follow through the PowerPoint on the OneNote link as well. Okay, let's begin. Today's revision is on FA2, and then some things need to share with you all. I think there are some very important things to watch for and mistakes to avoid. Okay, so let's start with the exam format. Okay, firstly, for exam format, you all should be aware that 50 multiple choice questions to be completed in 2 hours, and these are computer-based exams. Okay, there is no other choice. There is no paper-based. It has to be computer-based exams, right? So those of you who have not paid for the exam fees, don't forget to make a payment for it, right? Okay, back to the format. So you have 2 hours and then 50 questions. So as I've told you before in class that that gives you about 120 minutes for 50 questions, which means that you have roughly 2.4 minutes per question. Now you have to ensure that you stick strictly to 2 minutes a question. Right? The previous intake, there were students that couldn't complete the paper because they exceeded time. Right? You can't afford to exceed time. Okay, so bear in mind that very important point as you know when you go on to take the exams in the next 10 days time. Okay, the exam technique. So already have I told you that you should have completed the mock paper, and then you must have practiced the Kaplan revision kit, right? If you don't have it on hand, you can get it from Carousel, right? Or if you can't get it still, you can go to the used bookstore at Bras Basah. That's also you also can get it there. And most important of all is that you should have already attempted the simulated paper on the ACCA website. Okay, and those of you who have already attempted, when you come down, can you also let me know what problems you have regarding the simulated paper, right? Okay, so any questions about where the simulated paper is, again, you can contact me through my email address. Okay, so specimen paper have to be completed. Okay, so today the topics that we will try to look at, there is roughly 13 topics. Okay, I won't really go through in detail how to uh, like attempt the different types of questions in each topic. So I'd like to share with you the key concepts in each of these topics. Okay, one, the accounting concepts. Now the paper, the title reads FA2, which is essentially financial accounting, right? The main thing that you need to be able to do, and it happens all the time, is double entry. Make sure that you're able to apply a double entry rule, especially questions that require you to perform double entry like record sale of goods or purchase of goods. Those are very usual. If not, questions like correction of errors, okay, or if not, how do you record sales wrongly recorded as maybe sale of non-current assets. Okay, so you need to be very familiar with these double entry rules. Now, offhand, I can tell you that in any exam, the double entry rule easily gives like what? Easily there are like no less than 5 questions that involves double entry. So this topic needs to be practiced. Okay, and emphasize again, well practiced. Okay, following that is the accounting concepts, right? There are a number of accounting concepts that you should already know, right? One of them is prudence concept, right? Matching concept, and then there is the historical cost concept, business entity concept, consistency concept. Yeah. So these concepts are very important to study. Uh, Unfortunately, you can't go in like this after office hours. Okay. Yeah. Sorry about it. So the concepts like historical cost is very essential, right? You do get questions that ask you for things like, what is historical cost? And then you need to be able to pick the correct answer, right? For example, historical cost should be defined as transactions are recorded at its original or initial cost. Okay. Other concepts that get tested quite frequently would be like your matching principle. Okay. So do read these up before you take the exams in the coming 10 days. Okay, going on. All right, the accounting concepts and double entry rule. So the double entry rule quite simple. As some of you may have a different way of remembering how to record transactions. So one of the rules that I shared with many students is the Alice rule. Right, the Alice rule basically is just a very simple way of remembering what is debit. So debit on the asset side is an increase, whereas a debit to liability is a decrease. Right, a decrease in a decrease in income would be a debit, and then of course, a debit in the capital account will be a decrease, right? So finally, the last one is if you have a debit in an expense account, it means that there would be an increase, right? Now, aside from the this five category of accounts that you see, in your syllabus, asset, liability, income, capital, expenses, you may even come across questions that introduce to you GST, right? Sales tax, for example. Now, what do you mean by sales tax? Sales tax is your consumption tax. Now, be careful of sales tax. They say, take for example, you have a 10% GST on sale of goods, $100. Now, if let's say the goods are $100, so the total amount that you need to pay will be $110. Okay, so therefore, or rather in this case, the customer has to pay you $110. When you record, you have to be careful that you need to have a credit sales 100 and credit GST $10. Now the $10 is not an expense, it's not an income, it is a liability. Be aware of that, right? It's a liability. So GST may appear from time to time in your exam papers, but it will not be a heavy standalone topic or heavy standalone question. Okay, we can also have the reverse where you have a purchase of goods. Let's say, for example, you purchase the goods for $100 and the GST on it would be $10. Now, however, this GST is an asset. Why is it an asset? Okay, as a registered business, GST registered business, or we say sales tax registered business, you are entitled to be able to claim back the GST that you pay on the purchase of your goods. So therefore, any GST that is paid, in purchasing of a goods, that is recorded as an asset. Thus, this is debit GST, $10. Now, the other part is to credit cash, 110. All right. So, be aware of questions which you get uh, this GST amount, right? And then you need to have an accounting entry to record the GST. Of course, like for most of the questions, you don't see the GST because for most questions they are rather simple, but you may occasionally see questions with GST, so just be a bit alert for these. All right, so that's GST. Now, no one asked, but if you have practiced most of the revision kit, you may have already come across this. Okay, so I'll leave you to practice the revision kit, and then you come to me if you have any more questions on the GST.
Hi, so we are going to do some changes on our end. So basically, the internet will be affected.
Okay.
Yes.
Give me an hour. Okay, hold on. Sorry, give me a minute. Hey, sorry about it. So, just now there was some interruption, right? Because the those guys, they need to do some server maintenance. So anyway, uh, let me just quickly wrap up the following part. So probably you need to come back in the next 10 minutes. I mean on the same channel, then we continue. Right. So that was quite unexpected. Sorry about it. Okay, so anyway, some of the accounting concepts which I've already told you about. So later on, if you find that you got interrupted and then there is no the stream seem to have stopped, uh, you just come back in 15 minutes, yeah, and then we just resume from there. Okay, so the accounting concepts. Now, you find that this is like a very simple concept. What is accounting? It is the process of identifying, measuring, recording, and communicating economic information to permit informed judgments and decisions by users. So you might get questions that may ask you for true or false or pick what is the correct answer. All right, just watch for that. Okay, users of financial information, who are they? Shareholders, investors, tax authority, banks, and employees. Right, typically that. Okay, next. Yeah, so as mentioned to you earlier on, so there is actually quite a variety of accounting concepts that you need to revise on. One is the consistency concept, right? Consistency concept basically is defined as with this word, which is same treatment from period to period, which means that like if you apply depreciation straight line, it means that you apply straight line for that asset until the end of its life. Okay, going concern, basically the assumption that the business will survive for a year, up to a year. And prudence concept is defined as to avoid overstating assets and liabilities, or overstating assets and profits, and avoid understating liabilities and losses. So some others are very common would be like your historical cost concept, where all transactions are recorded at initial cost. Okay, and then one more is the business entity concept, where the business and owner are regarded as separate, right? So this is also the reason why drawings are recorded, especially for goods taken for own use, right? Or goods taken for own use. Okay, one more is the monetary measurement concept. What is that? Okay, this basically states that only transactions that can be recorded in monetary terms are recorded. For example, sale of goods, purchase of goods, right? So those are typically recorded, right? But you can't record things such as experience of your staff or quality goods, for instance. Okay, so that should clarify. Okay, going on. Okay, next is the uh, journals to final accounts. Right. For this, be very mindful of the source documents. What are the source documents? Source documents are basically items like invoices, receipts, uh, credit note, debit note. Make sure you're familiar with what these do. Right. Books of prior entry, the trial balance and what's the purpose of it, and the petty cash book. Okay, let's look at it in more detail. So generally, we have these 5 different documents. There is the invoices. Invoices basically meant to record the purchase of goods. Okay, and but at the same time, it can also be used to record as evidence the sale of goods. Right. So take note of that. And receipts would be to record payment collected or paid. Right. Credit note, on the other hand, is to record any goods returned. Right. It can be sale returns or purchase returns, depending on whether the credit note is issued or received. All right. One more is the bank statement. Bank statement is a very common source document. What do you use the bank statement for? Bank statement is used to uh, record all deposits and withdrawals that's occurred in a bank account. Right. Now, this is a question from some students previously that uh, that it's confusing that the bank statement debit and the cash at bank account or cash book debit, the signs are different. Yes, the signs are different. If you are doing this for the first time, be aware of that. The direction is different. For bank statement, the debit is a decrease, while the credit is an increase. The cash book at bank, which is the cash book, on the other hand, a debit would be an increase, while a credit is a decrease. Right. This is very applicable to the topic of bank reconciliation. Right. So I realize this is a question from many students. So be careful of it, especially when you are practicing the topic of bank reconciliation. Okay, going on. Right, you have roughly 6 different books of prior entry that you need to learn about. What are the 6 different books of prior entry? There is the purchase day book, the sales day book, right? These two basically to record the list of credit purchases for the purchase day book, whereas the sales day book is to record all of your credit sales, right? Credit sales means that these are sales that has happened, but then collection has not been done. You have not collected money yet. Okay, and then of course cash book, right, to record all collections and payments. Now the cash book is mainly for, like in your syllabus, it's more applicable for purpose of preparing your bank reconciliation. Okay, next petty cash book, and finally the general journal. You won't really be asked to prepare the general journal. More questions will require you to prepare to suggest the accounting entry, to correct the errors, or to perform the adjustments. The adjustments mainly are your prepayment and your accrual, mainly these two. Okay. Now, next one, trial balance. Okay, what does a trial balance do? So basically, a trial balance is a list of account balances, and the purpose of a trial balance is to confirm the arithmetical accuracy of the accounts drawn up, confirm that the double entry rule has been adhered to, right? However, you know what? If you find that the trial balance doesn't balance, and you see many questions like this, which tells you that the debit exceed the credit or the credit exceed the debit balances, now that's where you will have a suspense account, right? That type of question can be a bit confusing, right? Okay. Petty cash book. Okay, very easy topic. What does a petty cash book do? Basically, a petty cash book is to record the petty cash. Basically, it's a sum set aside for making payments for petty cash expenses, right? Such as bus fare, taxi fare, any small amount of payments, right? Okay. Next, usually a petty cash will start with a float. So this is usually the fixed amount that the petty cash start with at the beginning of each period. It could be the period could be defined as a month or a week, right? That really depends on the question, but it doesn't really matter. So essentially, you start with that float at the beginning of each period, and over the period, as you finish using up the float, at the end of the period or at the start of the following period, the accountant or the supervisor will replenish the balance, right? So the replenishment or the top up is also known as the reimbursement. You'll find that the questions on petty cash book, as you have practiced, are rather simple, right? They are really not as complicated as the suspense account questions. Okay, good. Accrual and prepayment, what to watch for? Key thing, make sure that you know how to draw the timeline, right? Those of you who attended my class, the timeline, right? How do you record accruals? How do you calculate the accrual and the prepayments? And more important to many students, the confusing thing is how to record the effect of all this accrual and prepayment on the SOPL. Like for example, because of the accrual, would your profits be over or understated? And if you have a prepayment, would your profits be over or understated? Right? That type of question can be quite difficult for, students who are doing this for the first time. Right? There are plenty of examples, especially the ACC specimen paper. There are a few questions like this. So this accrual and prepayment are typically recorded, right, at the end of the accounting period. And when we talk about accrual and prepayment, we are referring to accrual of rental, prepayment of expenses, right? But it can also be accrual of revenue and prepayment of revenue. And make sure you know the double entry to record these, right? We went through that before. Next, allowance for receivable. Also another confusing topic. The allowance for receivable has another name, which is the allowance for doubtful debts, right? The allowance for receivable basically is to record an estimate of the debts that are likely to turn bad, okay? If you don't remember that, right? Whereas a bad debt means that the debt has already been irrecoverable, cannot be recovered because the debt the debtor has run off or the debtor has turned bankrupt, for example. Okay, but it's a straightforward topic. Main thing regarding the allowance for doubtful debt is to know how to record the increase and the decrease, right? Okay, depreciation, quite straightforward. There are only two methods of depreciation that you should be concerned about: straight line, reducing balance. That's about it. You won't see any other unusual ways of calculating depreciation. Okay, next. All right, just a simple illustration to show what happens if you have rental expenses unpaid but already incurred. That means the rental owing. Now, be careful of questions that would require you to analyze what happens if you are going to record the accrued expenses. Now, when you record accrued expenses, the effect is that expenses will increase, resulting profits declining, and at the same time, current liabilities will rise. Now, the same is also true if the question asks you, what happens if you fail to record the accrued expenses? Now, if you fail to record the accrued expenses, then the reverse is true. Because you will have an increase in expenses, profits will rise, whilst liabilities will decrease. So, be aware of that. So, watch for questions asking you for what if you record, what's the effect on expenses and liabilities? And what if you fail to record, what is the effect on expenses and liabilities? The revenue not received and but earned, now that is a bit different. Why? Because when you talk about revenue not received but earned, what does it mean? It means that you have already received sold the goods.
Thank you.
You have already you have already sold the goods, but have yet to collect collections. You have not collected money from the customers. So what is the effect of this? This basically is what we refer to as a what sale? Credit sale. If you remember, it's a credit sale. So credit sale means that there is more revenue, right? But it doesn't mean that you have collected money, of course. At the same time, you find that there are more current assets because there are more receivables, right? So that is what we mean by revenue not received but earned, right? Now, I often tell students that if you happen to see questions on this and if you're not too sure, what you ought to do is that you flag out the question in the on during the exams, flag the question now and fill up an answer, because it may take a bit of time to digest and select the right answer, especially when the question asks you what's the effect on profits and assets. Okay, next. Prepayment. Prepayment is on the reverse. What is prepayment? Okay, so prepayment works a bit differently from your accrual. What does prepayment mean? Prepayment means that payment is made first or made earlier. Now, when you have prepayment of expenses, this will result in a decrease in expenses, while profits would not decline. Profits would rise instead. Sorry, there is a mistake there. Profits will rise. And this would also result in increase in current assets. What if you have revenue received but not earned? Now, this is different. Received but not earned means that you have already collected money from the customer, but the goods have not yet been delivered, the services have not yet been provided. Recording this means that there will be lesser revenues. Obviously, there is less profits. Now, because you have received the money, but not yet provide the service or deliver the goods, it means that you have an amount owing to the customers. It means that you have an increase in current liabilities because you owe the customers a service or you owe them the goods. So that's the accrual and prepayment concept. Okay, good. Oh, yeah. Oh, I just realized that I've also included a short summary below. Okay, so generally to summarize, if you have accrued expenses, the effect on the profit and loss is that expenses rise, resulting in lower profits. However, in the statement of profit and loss, statement of financial position, you have more current liabilities. On the other hand, a prepaid expense will result in lesser expenses, more profits, and greater current assets. So this presents a brief summary of what happens if you have accrued and prepaid expenses. What if you have revenue not received but earned? This would mean that there would be more revenue, more profits, and of course, since you have delivered the goods, sold the goods, but you have not collected money, it means that there should be more current assets, which is receivables. What if you have revenue received in advance? Now, receive in advance means that you have not yet delivered the goods, you have not provided the service, there should be less revenue and therefore less profit. Because you have received the money from the customers in advance, but you have not provided the goods, it means that now you owe a service to the customer, so therefore there is an increase in current liability. Right? Be aware of that now. This is useful because some questions do ask you for this, the effect on profit and loss. Now, nasty questions will ask you, what is the effect of not recording accrued expenses? And other nasty questions will ask you, what is the effect of not recording revenue not received but earned? Right? You get questions like that. Just be careful of that. Okay? So my summary here gives you the effect if you record the following items. Going on. Bad and doubtful debts. Okay, what are your bad and doubtful debts? Okay, I think the most confusing part for most students actually would be the accounting entry. The concepts are very simple. Bad debt refers to debts that are already bad. There is no way you can get back money. Recovery of bad debts, that's common sense. That simply means that you manage to get back the money that was previously not collectible. Though that is rare, I mean that you get back money that was previously bad debt. Okay, doubtful debts means that these are debts that have a rather high chance that they may not be collectible ever for whatever reason. Allowance for receivable basically is the same as allowance for doubtful debts. If you had attempted some of the earlier papers, you would have seen some of these terms being used interchangeably, right? Now, beware that this allowance for receivable is an estimate. Okay, I emphasize, is an estimate of the amount of debts that are likely to turn back, or the amount of debts that are doubtful. That's what I mean by allowance. Okay. All right. So, how do we record bad debts? Okay, the accounting entry quite straightforward. Debit bad debts, credit trade receivable. That's about it. Nothing too difficult. However, if you have bad debts that are already recovered, so basically it's you credit the bad debts or irrecoverable debt expense and debit bank. So this is if you recover the bad debt expense, recover the bad debt. Okay, next. Okay, so this was the one that I told you about, right? For many students, one of the problems that they face is how to record the allowance for doubtful debts. Two main things you need to know: how to record the increase and the decrease. The increase basically is just debit bad and doubtful debts, credit the allowance for receivable. Now, if you have a decrease, then the accounting entry is basically the reverse. Right. Now, how do we determine the amount of doubtful debts? Okay. Now, aside from the question telling you how much is the estimate doubtful debts, this is usually determined by the management based on their judgment, and that they come to conclusion that the doubtful debt should be a certain amount, right? And in the SOFP, the allowance for doubtful debt will be reflected as a deduction against receivables. The amount that remains is known as net receivables. Beware, sometimes you do see questions that tell you or that requires you to find out what is the net receivable. So net receivables simply means receivable minus your allowance for doubtful debts. Okay. All right. Now, there are two types of allowance for doubtful debts or allowance for receivables. Now, for your purpose, you don't really need to invest too much time understanding the difference between the two. As far as you're concerned, this is the uh, this is the concept that you need to know. This one, being able to record the increase and decrease. That's the important part. You don't really need to be too concerned about the specific and general allowance. But if you're meeting me separately for face-to-face, do check with me if you are interested to know more about it. Otherwise, uh, for your purpose of the exams, the accounting treatment is the same, right? Okay. All right. Another part. Okay, one of the painful things that many students hate to do is item 3. Right, one of the very unpopular topics, students hate this a lot, I think. Disposal of non-current assets. The others are quite straightforward. Now, those of you who have joined me for the last lesson, you will have remembered that we went through this concept of capital expenditure, if you remember. What is capital expenditure? Capital expenditure refers to purchase or acquisition of non-current assets, or you may say buying of non-current assets. Now, the key word here is for use in a business. For use in a business. It's not for resale, it's different. It's for use in a business. Now, otherwise, capital expenditure may refer to improvements to non-current assets. What do you mean by improvement? For example, you upgraded the machine, so the machine, instead of producing 10 units an hour, the machine can produce 20 an hour, right? So improvements refers to upgrading. So you see here, upgrading of machine for higher production capacity. So it cannot be something like replacing a worn tire. It cannot be something like replacing a worn curtain. Okay, the window curtain. Now, worn window curtains are not, if you replace them, that's not capital expenditure. Right? It has to be the keyword improvement, upgrading. On the other hand, revenue expenditure would be those are incurred for purpose of operating the business. What do you mean by operating the business? For example, you pay rental so that you have a place to operate your shop, operate a business, utilities, and wages because you need employees to be at the shop to sell goods and to watch after the shop. Yeah, so these are incurred for purpose of operating the business. Quite a simple concept, but it gets tested from time to time. A very typical exam question, right? Johnson bought a machinery for use in his business. Machinery cost 2008. However, he incurred additional costs like delivery and installation, 200, annual license fee, 150. And then further, he paid this training staff operator. So he trained one of the staff to operate the machine. Now, the expenditure to be capitalized, how much would that be? Calculate the expenditure relating to the machinery that are to be capitalized. Now, in this case, the amount to be capitalized is only 2000 and the 200. Okay? Now, the annual license fee cannot be regarded as capital expenditure. Why? Because the annual license fee has to be paid year to year, and this license fee is paid because it's part of your cost of running a business. Right? And same thing for training. Right? You may train the staff so that they can operate the machine, but then the training is still regarded as revenue expenditure. Be aware of that. Now, the same goes for insurance. You purchase an insurance so that if people operating the machine, they will, like in case if they get injured, there's insurance coverage. That insurance is also revenue expenditure. Be aware of that. Okay. Now, however, if I were to change this to insurance paid to transport the machine, paid for purpose of transporting the machine. Like for example, you bought a machine from the United States, you paid insurance, marine insurance on that machine. In case if the ship sinks somewhere in the ocean, you still can get back your money, for them, So that insurance on the non-current asset on the ship, that insurance is to be capitalized. Okay, so it's a bit different depending. Okay, but long story short, generally insurance should be regarded as revenue expenditure in most cases, right? Unless they tell you that the insurance is meant for purpose of protecting the machine from damage, right? Especially when you're buying it for the first time and is traveling, is going on the ship, is coming to your warehouse on the ship, right? Then that insurance bit is different. Okay, going on. Right, you do see this quite regularly in the exam, so watch for that. Okay, right. If you're not too sure, the revision kit has plenty of examples on this. Do work on them. Okay, next. Okay, depreciation quite simple. Basically, only two methods of depreciation that you need to know. Right, the accounting entry, there's only one: debit depreciation, credit accumulated depreciation. And we define depreciation as, the keyword is allocation of cost of the asset over its useful life. There are mainly two methods of depreciation. Either we use cost times percentage, if not we take cost minus scrap over the useful life. Now the alternative method is the reducing balance method. The reducing balance method is to use cost minus accumulated depreciation, multiplied by percentage. Right. Generally, your exam questions on calculation of depreciation is quite straightforward. Right. Sale of non-current assets. And commonly the question may ask you for what is the gain or loss from disposal. So generally it's the difference between sale proceeds and net book value. Now net book value, however, is also known as carrying amount. Now one thing I advise many students is beware of different name but referring to the same thing. Net book value and carrying amounts refer to the same thing. Both refers to cost minus accumulated depreciation. Right? Very important. Now, at other times, the term disposal is replaced with the term sale of NCA, right, or sale of non-current assets. So far, the questions I did with the class is, you don't really see many questions asking for the journal entry, but however, do be familiar with the accounting entry if you are ever asked. Right. Otherwise, I think the calculation of gain or loss is quite common. It's quite a simple calculation. Gain or loss is reflected in the statement of profit or loss, right? And then, but the proceeds refers to the money that you get from selling the asset. Be careful of that now. It refers to money that you get from selling the asset, right? I think some people confuse the term sale proceeds. Okay, going on. Okay, next thing. A very nasty question from, I think, to many students. That is, what happens if you wrongly capitalize your expenses? Okay, in class, I've already demonstrated using the long-winded way of understanding what's the effect. Okay, for purpose of this revision, I'm not repeating that. But if you want to, when you see me face to face, then you can ask me more about how it looks like. Okay, so anyway, if you wrongly recorded capital expenditure as revenue expenditure, this will result in greater expenses, profits will decline, you have less assets. On the other hand, if your revenue expenditure wrongly recorded as capital expenditure, this will result in lesser lesser depreciation. Lesser depreciation? Okay, oh yes. You have less expenses, but the depreciation would be greater. You see the sign, actually it's not very clearly written, right? You have lesser expenses, but the depreciation increases. Profits, on the other hand, would rise because your revenue expenditure is wrongly recorded as capital expenditure, so you have more profits. Because you wrongly recorded your revenue expenditure as capital expenditure, this means that there will be more assets, right? Now the sign, beware, in your exam, an increased sign is also referred to as overstated. A decreased sign refers to understated, right? This comes up from time to time, but not like an extremely frequent question. Okay, moving on. Okay, so that's it for the non-current assets. Now be careful of the computation and the accounting entry here. Valuation of inventory. Now for this topic, you notice that I didn't state a valuation method. I have FIFO, I have weighted average, but there's one method that I don't have here. That is the LIFO method. Now the LIFO method is not required for purpose of your FA2 syllabus, right? So if you saw that in lecture notes, just ignore that. Okay, you never have to do the LIFO method. Okay, let's move on. Okay, we will understand in this case a very important concept, that is law of cost, or NRV. Right? If you joined my class before, we did plenty of questions on law of cost, or NRV. It's quite easy, right? I mean, once you're familiar with that. The other is the FIFO and weighted average. Okay, let's move on. Okay, now the value of inventory. You bought your goods from Amazon, you bought your goods from eBay, you bought your goods from Alibaba, wherever it is, right? So that includes not just the purchase of goods, especially when you purchase from Amazon or eBay, you would have to pay for shipping or air freight. That adds up to the value of your inventory. And then what happens if you purchase insurance, for instance? So that adds on to the value of your inventory. So basically, in short, inventory value includes not just purchase price, but any other costs related to purchasing the inventory. All right. So that's this. You don't really see a lot of questions on this if you practice the revision kit. But the following one, yes, you see plenty of questions on this. This was very common. Right. So basically, in accounting, we practice this method to value inventory. Law of cost, or net realizable value. What do you mean by cost? Okay, so the cost was the one that we defined early on in the earlier PowerPoint. The NRV refers to estimate selling price less related cost to sell. You see plenty of questions like this in the revision kit. And this related cost to sell typically relates to repair, packaging, right? Packaging, like, for instance, the goods have packaging that are worn, so you need to purchase new ones and replace the packaging, for instance. Usually, it's very easy to identify this related cost to sell. All right, so take note, is estimate selling price less the related cost to sell. It should be easy to find the question. So this concept is actually based on prudence concept, right? Prudence concept says that you should avoid overstating assets and avoid overstating profits, right? So we came to a very important stop point. Let me just show you how we apply to the a very simple example here. And there are quite a number of examples like this that we did before in class. Okay. Take, for instance, ABC at 20 units of inventory, which costs $30 per unit. Upon examination, we realize that the NRV of this inventory is $22. So what does it mean? How much should be recorded in the statement of financial position? Now, instead of taking 30, we use 22, because the concept says the lower of, right? Whichever is lower. So between 30 and 22, 22 is lower. Therefore, 22 times 20, that gives you the current asset, okay, or 440. The inventory should be 440. Now, then what about the original amount of 30? Well, then the original amount of 30 is no longer applicable, because we only use 22 times 20 to record the inventory in the statement of financial position. However, you know what, if you were to take 30 minus 22, that gives you 8. That means every inventory has lost $8. $8 times 20 tells you that you have lost roughly $160, right? What does it mean? It means that in your profit and loss, you will find that you have suffered losses of 160. Why? Because your stocks can no longer be sold for more, right? For maybe reasons like the inventory is not so good, maybe the inventory has already become obsolete. So there'll be an increase in expenses of 160. Of course, an increase in expenses of 160 means that there will be lesser profits, right? Okay, so that's this. The most questions I came across with the students in class, they seem to focus very heavily on inventory value to be reflected in the statement of financial position. That seems to be a very commonly emphasized uh, question. So you may want to practice more of this, right? Okay. It can be a bit confusing if you're not well prepared for it. All right. So we come to stop at this chapter. Let's take maybe a 10-minute break. If you need to use the washroom. So later when we come back, we would uh, continue from here on. Now I have a second objective that I would like to complete. That is to look at the specimen paper. So meantime, while if you're not going for break, you can probably look at this. I think this is something that I would like to go through. Right, there are certain questions that I'd like to go through. I think they are very applicable to everyone. So let us call for a short 10-minute break, and in 10 minutes when you come back, let me finish the rest of the PowerPoint and select a few of the questions from here to illustrate how you should solve. Okay, so let's come back shortly in 10 minutes. Okay, so let's start soon. Hey, you may want to look at the question 12. Just make sure that you have a clear understanding on this, and quite a number of people have problems doing this question 12 for some odd reason. Okay, let's resume then. Right, so this was something I observed. That was the sales tax. Beware of the percentage. Now, while the question says the cost of goods was 357.5, but you see the keyword here is includes sales tax of 10%, which means that this 357.5 is actually 110%, right? I think when I was going through some of the students' submissions, I realized this was a commonly overlooked keyword, right? It makes a lot of difference. If the question says which excludes sales tax, now then it's a different question. However, that's not the case. The question says includes. So therefore, this works out to be 110%. Would there be any situation where this would be 100 instead? Well, no, because the keyword here is includes sales tax at 10%, right? Okay. So of course the rest is very simple. 110% is 357.5. Then you can find out what's 10%, and therefore 100% should be 357.5 divided by 110 multiplied by 100. Right. So this is a very simple question, right? I think the whole problem was that, if you are not well prepared for it, you tend to overlook such very fine keywords, right? And that's where you have problems doing this. Okay, we now come back to where we stopped just now, just to complete. Okay, let's come back to the revision page. Okay, and just now we were here, and there's actually quite a number of things to touch on. No, basically what I've given you here is just a short summary, but it's not meant to be a comprehensive summary of whatever that you need to know for purpose of exams, right? But it gives you a number of the key things to watch for. Okay, let's start with where we stopped just now. Okay, good. Okay, the FIFO method is quite simple, right? So there are two valuation methods that you need to know. One is the FIFO method, the other is the weighted average method. Right? The FIFO method basically says that the earlier inventory must be the first to be sold or issued, right? So this will tend to result in inventory values that are more recent. It's very applicable to businesses which deal with highly perishable goods, like vegetables, fruits, and so on. Next. The weighted average method, however, on the other hand, does not care. Right? It doesn't care whether it's first batch, last batch, doesn't matter. Basically, the inventory value for weighted average is a blended average of purchase costs. Now, if you don't understand the word blended, it means imagine you have a cup of coffee and you pour milk into it. It's a blend, right? So it's a mix of purchase costs. Let's use the following example to demonstrate. Okay, now initially you had 30 units bought at $10 each, and then you have another $30 bought at 13 each. After that, you bought another. Let me just take this away. Yeah, right. And then you had bought another 30 at 15 each. So subsequently, you sold 100 away. Okay. Oh yeah. I think that was the reason why I put that. Yeah. Oh yes, yes. That was the reason why I placed the 50. Because if it's 30, then it wouldn't make sense. Okay. So it should read as 30, 30, and 50. 30, 30, and 50. So you sold 100. Now, if we apply the FIFO basis, what should be the cost of sales? And what is the closing inventory? Now, sometimes closing inventory is also known as inventory at end of period. So take note of that. Right. Again, like what I emphasized to you just now, in this exam, you're likely to see different names, but they refer to the same thing. Okay. Now let's move on. How do we calculate the cost of sales? Quite simple. FIFO means that the first 30 that you have gotten will all be sold. So 30 times 10, 30 times 10. And then because you want to sell 100, that means 30 isn't enough. You need to take the next 30. Right, 30 times 13. Now you need a total of 100. So 30, 30, that's still not enough. You still need to take another 40 from the 50 here. Now if you take 40 from here, then that's where you have 10 remaining. Okay, 40 times 15. Now this therefore gives you the cost of sales. 30 times 10 plus 30 times 13 plus 40 times 15. That gives you your cost of sales. And as for the closing inventory, that would be the remaining units from the last batch, which is 10 in this case. 10 times 15, that gives you your closing inventory. Let's say if you were to practice the weighted average basis, the weighted average basis is incredibly straightforward. If you apply the weighted average basis to find cost of sales and closing inventory, your very first important step is that you need to calculate the average cost per unit. What do you do? 30 times 10, 30 times 13, 50 times 15. Take that as the numerator, divide it by 30 plus 30 plus 50. That's the denominator. That will give you $13.09. Now, with $30 and $13.09, how do we find the cost of sales? You sold 100, so therefore 13.09 times 100. That's your cost of sales. Now you still have 10 remaining. So the closing inventory for that 10, how much would it be worth per unit? So 10 times 13.09, that gives you the closing inventory. So if you apply the weighted average, you need to find the average per unit first, right? Quite straightforward. And then the following step, which is the cost of sales and the closing inventory, that's quite straightforward to get. So for your case, the more complicated item would surely be the FIFO. So the FIFO will likely be the one that you need to practice more often, right? Because that will be a bit more complicated compared with the average method. Okay, going on. I think that's quite straightforward. Okay. Right, going on. Like the closing inventory, the inventory topic is actually quite simple. You find that the things that are being tested for closing inventory are quite predictable. They tend to be the same thing all the time. FIFO, average, and then the law of cost or net realizable value method. They usually go around the same area most of the time. Strange. It seems to be loading a bit, taking a bit more time to load. That's a bit odd. Oh well. Hang on. That's a bit strange. That's a bit strange. Okay, let me just try to refresh that. Yeah, that was a bit surprising. Oh, okay, it's back to life again. Yeah, that's very strange. Yeah, I'm doing this in office, so the network seems a bit cranky now. Not sure why. Okay. Yeah, I should have done it at home instead. Or I should have done this live streaming at home instead. Okay, let's come back to where we were just now. Yeah, so that's this. Right. If you may want to rerun through the workings later on your own regarding this FIFO and the weighted average methods. Let's go on to the following. Okay, valuation. Now this is the one that is quite horrible. Horrible in that some questions would ask, what happens if your closing inventory is overvalued? Okay, or for that matter, what happens if your closing inventory is undervalued? Make sure that you are aware of the impact on the cost of sales, GP, net profit, and in the SOFP, the effect on the inventory and the equity. Now, sometimes equity is known as net assets, right? The signs are quite important, so be aware of that. Okay. Now, I also have an illustration on how to prove that why if you have overvalued inventory, why is it that your cost of sales would be lower? Okay, let me use the following example to prove to you. If I have purchases of 1,000 and my closing stocks is 100, this would mean that my cost of sales would be 900. However, if I have purchases of 1,000, but I have 200 of closing stocks, compare this to. If I have more closing inventory, the effect is that my cost of sales would be lower. Right. So that was how I confirmed that the cost of sales would be lower if you have overvalued closing inventory. Now, obviously, if you have lesser cost of sales, your GP will be higher, and that would result in higher net profit, right? And overvalued inventory means that obviously your inventory on hand are more valuable, more expensive. Okay, and of course the reverse is true if your inventory valuation is undervalued. So the signs are therefore reversed, or you can say that the effects are therefore reversed. Right? You see that sometimes. You see such questions sometimes in the revision kit. All right, next. Bank reconciliation. What do you mean by bank reconciliation? Now, bank reconciliation basically quite simple, right? You need to understand what are the items that cause differences between bank records and the business records. How to prepare a bank reconciliation. Now, you do not need to remember the format, but you need to be familiar with the calculation. And 4 would be, how do you update the cash book or the cash at bank account? Now, I'd like to clarify at this point in time that the bank statement is not the same as the cash book. They are different in definitions. Okay, good. Okay, so let's move on to following. Right, so the whole idea about the bank reconciliation is when you have this thing that causes what you call a timing difference. Right, it causes a timing difference, especially when there's a check payment. Now, you don't really have to remember what we mean by timing difference. I don't think that's that important. Now, the whole point is really that when a check is issued, for example, to a supplier, however, the check is not deposited. So this will result in the bank statement having no record of a check that you have issued. But then in your records, in your cash book, you have record of the check being paid to the supplier. Okay, now basically there are two categories of items that will cause a difference between your cash book and a and your bank statement. There are basically two categories of items. Now, category 1 are those that are reflected in cash book, but they are not in the bank statement. So take note of the names. They will be mainly your uncredited deposit or lodgement. The other is your unpresented check. They will be mainly recorded in your bank reconciliation statement. Now, some questions which are quite difficult, they use one more example, that is errors. Errors made by, for example, the accountant. Okay? Or, yeah, stuff like that. But otherwise, for normal cases, watch for the uncredited deposit and the unpresented check. Those are the ones that occur regularly. 2. The other category of items are the ones that do not appear in cash book, but they are in the bank statement. These have to be subsequently updated into the cash book. What are they? Interest income. Now, obviously, the bank will not call you and tell you that, sir, you are going to receive interest of $10. The bank will not call you to update you about the interest that you have received. Now, this will not be known, of course, until end of the month when the bank issues to you a bank statement and you understand what are the transactions that had went into your account and without you realizing. The other are dividends, and one more is credit transfer. Now, credit transfer usually happens when money is sent into your bank account. So these are the additions. Now, the deductions would be usually bank charges, standing order, direct debit, bank charges, and the last one, dishonored check. Now, the dishonored check simply means that it's a check that was issued by, for example, your customer, but this check cannot be processed by the bank for reasons like, for instance, the signature is incorrect, or perhaps the date is incorrect. Okay, situations like this will cause a dishonored check. Now, for your purpose, dishonored check are always assumed to be issued by the customer and never assumed to be issued by the business. Be careful of that. No one asked me that question, strangely, but in practice, dishonored check can be issued by a business. So can it be issued by a customer? But for exam purpose, dishonored check is always assumed to be issued by the customer. Right? It sounds funny, right? But that's a fact. Okay. Now you need to remember the examples. They are quite applicable for answering questions on bank reconciliation. Right. But of course, you can refer to the OneNote link, which will give you a much clearer resolution compared with this YouTube streaming. The format for the bank reconciliation. Now, the format never change. It doesn't vary much. It's always the same. I like to add, always the same. You start with number 1, the bank statement balance. Now, the bank statement balance is typically credit. Now, it's credit by default. Now, credit bank statement balance is positive. If you remember my earlier part of the PowerPoint presentation, the balance, the bank statement balance and your cash book balance is opposite in terms of the debit and credit signs, right? Okay, so in any case, remember the bank statement balance always start with credit balance, and that's by default. Second step, add uncredited deposits or lodgement. Now you find that in many of the questions, the term lodgement is used. You find that a very weird term, a very unusual term, but it simply means money that you have received, in short. Okay, add uncredited deposits or lodgement, less unpresented checks, if there is any, and the remaining will be the cash book. Now, let me ask you a question. Which figure would be recorded in the statement of financial position? Okay, I repeat that question. Which of the items, 1, 2, 3, 4, would be recorded in the statement of financial position? Now, the answer is not 1, be careful. The answer is the cash book. This one. This figure is the figure that gets recorded in the statement of financial position. In this case, if it's debit, then it is recorded as a current asset. Remember that. This occurred quite frequently, I think, in the revision kit, right? The revision questions from Kaplan Publishing, right? Okay, so as I've highlighted again, a credit balance is a positive balance, whereas in the cash book, a debit balance is a positive balance, is reversed. Now, the sequence or the steps could be 1, 2, 3, 4. If not, you can reverse it by preparing from 4, 3, 2, 1. The sequence can be reversed. But I suggest that to make life easy, ignore what I mentioned here. Just prepare it as if it's only 1, 2, 3, 4. Okay, so that's this. It is quite a simple process. And if you're familiar with this, generally most of the bank reconciliation questions are easy to attempt. We are like, yeah, we're quite somewhere halfway through. Right. Okay, then how do we update our cash book? Simple. Take the cash book balance. Typically, your question will state that this is before correction or before adjustment. So then you add whatever collections minus whatever payments. That should give you your adjusted or corrected cash book balance, right? So there are only two things you need to know: the bank reconciliation and the process of preparing the updated cash book, right? You notice that I don't have a T account for this because in the exam you never have to prepare a T account. That's not required. Thankfully, for those of you who hate T accounts, that's not required. You just have to know what to add and minus, and that is good enough. Right. Bonus tip, right? And I like to emphasize this in your exams. Some questions are multiple choice, but some are fill in the blanks. Beware, I emphasize to you, some questions are not just multiple choice, right? They are also fill in the blanks. So don't go in and attempt your exams thinking that all questions must be multiple choice. Of course, I made a mistake earlier on. I should have told you that some questions require fill in the blanks, as in fill in the number, right? But the difficulty is the same still. Okay, let's go on. Control account. I had a student that hated preparing the control account, but when it comes to preparing, calculating the closing balance using addition subtraction, she's good with it. Let's see. Okay, a few things. One is, how do you prepare the control account, especially to find the closing balance? And reconciliation. Well, some questions require you to prepare the reconciliation. Let's have a look. So main thing is that there are two types of control accounts that you need to know for your syllabus: receivable and the payable control, right? And the whole point about the control account is to check for fraud and error, and the other is to avoid crowding in the general ledger. Oh, by the way, general ledger is also referred to as the nominal ledger, right? They are the same thing. Okay, a typical receivable control account will look like this: opening balance, credit sales, this on the check on the left hand side. You have cash, sales returns, discount allowed, bad debt, contra, and balance carried down. Now, of course, you know, a number of questions would require you to find out what is the carried down. Some other questions require you to find out what is the missing credit sales. Right. So you may be asked to find either one, either the closing balance, if not the amount of credit sales for the period. Some questions also would point to you. We have this list of balances in receivable ledger. If you don't remember, a list of balance in receivable ledger basically literally means a list of your receivables, like, for example, A, B, C, and D, and so on. So basically, this list of balances must ultimately add up to be a certain amount. And supposedly, this certain amount must be the same as your control account amount. Supposedly, they should be the same. Now, if you happen to find that the carry down is 200, whereas the list of balance shows 180, what does it mean? It means that you have to perform a reconciliation if the question requires you to do so, right? Now, from experience, many students hate to do the reconciliation, but I think most have no problem calculating the sales and the closing balance. Those are generally fine. Yeah. Okay. Now, if you have a case like this where the list of balances and the closing balance are different, that's where the question may prompt you that how do you rectify this? What accounting adjustments do you need to reconcile the differences? Now, that can be a bit complicated. We'll leave it for the face-to-face consultation. Okay, additional things to watch for. Receivable ledger is also known as the sales ledger. Don't forget that. Allowance for receivable is never shown in the control account. Beware, it's never shown. That's why I didn't indicate it in my example here. Okay. The other is the payable control account. The payable control account is quite simple. It's basically like a reflection of the receivable control. You have a brought down, you have credit purchases, cash, discount received, purchase returns, and contra. So it's almost the same as a receivable control, except that it's the reverse. Now, however, you don't have cash purchases. Beware. Right? Cash purchases are not a part of your payable control account. Okay, same thing here. Payable ledger also refers to purchase ledger. They are the same thing. All right, very good. So now I will not perform the example for the reconciliation. I'll leave it out. That will take up a bit too much time. But the concept essentially is the same as the bank reconciliation, right? Those of you who are seeing me for the face-to-face, we discuss this separately offline, right? But if you are taking this for the exams, try not to leave it out. It can be quite easy to solve, right? Usually, this reconciliation is required if the control account balance is not the same as the list of payable ledger balances. That's when you find that a reconciliation will be required. The question for this it's not so frequent, but of course deserving attention. I have happen to have an example here. This is a very simple example of the reconciliation. Okay, at the end of the year, you found that John had a certain debit balance in his control account. Total list of balances in the receivable ledger is 2,000. Then later on, it was realized that there was a receivable balance of 20 not shown in the receivable ledger. Okay, that's very simple. So what should be the correct total list of balances in the receivable ledger? Common sense, 2,000 plus 20, right? Right, 2,000 plus 20. Now this is if the question gave you 20 debit balance not recorded. Now, however, if we change it now to $20 credit now not recorded, the answer is a bit different. The answer would be 2,000 minus 20, but not minus 20 only, minus 20 and minus another 20, right? If let's say the question gave you receivable balance of credit not reflected, okay, that can be quite confusing to understand, right? You may want to take a snapshot of it and then try to digest this offline, right? Okay, going on. Another complicated example. I think I'll leave this for you to uh, work on at your own time, right? But I'll discuss with those whom I'm meeting face to face later on. But if you want, you can take note of the solutions. This is how we work out the corrected balances in the receivable ledger. Okay, let's move on. Okay, good. We are more than halfway through. Yeah, just a couple of pages more. Okay, what are the errors that you need to watch for? Main thing will be the errors affecting the trial balance, especially the suspense account, right? And errors not affecting the trial balance. And how do errors affect the profits and losses? Okay. What are the errors that affect the trial balance? Usually, they will be things such as transaction that has a credit but no debit. If not, it could be there is a debit but no credit. Otherwise, it could be transactions with two debits or two credits. Another case is transactions that has a debit and credit amounts that are different. For example, the debit could be 20, credit could be 400, for example. Account balances missing from the trial balance, right? Not recorded in trial balance. That's why the trial balance doesn't add up correctly. So typically, this will result in a suspense account balance, right? Suspense account balance exists because the debit balance and credit balances are not the same. If your debit balance is greater than the credit balance, this will result in the suspense account occurring on the credit side. Okay. I seen this in a few of the Kaplan revision kit questions. It can be quite easy to solve, right? You just have to understand whether this suspense appears on the right hand side or the left hand side. Yeah, so that's the tricky part. The 6 errors. Now, you may ask, do you need to memorize it? Unfortunately, you will need to know all 6, and yes, you have to memorize it. It gets tested from time to time. What are the 6 errors? Error of omission. What is omission? Omission means transaction not recorded. That's what I mean by omission. Omission means not recorded. What is commission? Commission means that the transaction is recorded in the correct class, but in the wrong account. A very good example would be you bought a washing machine, but you record it as a furniture. You bought a table, but you record it as a TV, right? Same class, but the wrong account. The error of principle is not is that the transaction is not recorded in the correct class. What could that be? For example, you bought a washing machine, but you recorded the washing machine as cleaning expenses. Or maybe you recorded cleaning expenses as purchase of washing machine. Error of original entry. This is where the double entry is correct, but the amounts recorded are incorrect. For instance, the debit amount and credit amount is supposed to be 400, but for some reason it was recorded as 500 or something. Compensating error basically means that the account balances happen to have the same amount of mistake. The debit and credit amounts happen to have the same mistake. For instance, purchase and sales overstated or purchase and sales understated. And the errors offset each other, or we say compensate each other. Normally, the two accounts involved, they are opposites, like purchase is debit, sales is credit. It could also be discount allowed and discount received. Usually, it has to be two accounts that are a debit and the other must be a credit, right, in order for you to have a compensating error. The last one is the complete reversal. What's complete reversal? Complete reversal means that the debit credit entries are opposite, right? It's exactly opposite. That's why you have an error. For example, you're supposed to debit the cash, but then you credited the cash instead. That's complete reversal. Some questions requires you to identify which error has occurred in the example. All right, so the question may state for you a transaction, and you need to cite which error has occurred in the transaction. All right, some examples here. Now, okay, just have a quick look. Then I would show you the the two things here. One is the effect of error on the profits, and the journal entries. Now, because of the limited time, I will not give you time to walk through. But if you want to later when you revisit this video, you can pause and try to work through the solutions. Okay, let's try. Item 1, motor expenses of 200 were omitted from the books. Amount of 50 received from John was recorded as received from Doe. Discount allowed of 20 was recorded as a debit in the discount received account. Sales and cost of sales accounts were overstated by 120. Interest received of 25 was recorded as a debit in interest income account and a credit in the cash at bank. Finally, purchase of copier for 250 was recorded as a printing expense. Okay, the first one. Right, the first one is an error of omission. How do we know? Because it says here, omitted. Okay, the second item. You receive from John, but you recorded as Doe. That means there is an error of commission. Right. Correct class, but wrong account. Or in this case, it's the wrong person. 3. Your expenses were wrongly recorded as an income. That is an error of principle. 4. Sales is credit, cost of sales is debit. Both were overstated by 120. So that's a compensating error. 5. Interest received of 25 recorded as a debit in interest income. On the other hand, the cash at bank had a credit. So this is an example of complete reversal. And the last one. Purchase of copier for 250 was recorded as printing expense. Now, copier is an asset, but printing is an expense. So that is an error of principle. Okay, now we come to the next thing. Right, again, this video later will be made available on my YouTube channel, so you can replay that and freeze, and while you work through. So don't worry about rushing to copy down the solutions. The correcting entry. Debit motor vehicle motor expenses 200. Credit payable 200. For the second one, what's the second one? Amount of 50 received from John was recorded as received from Doe. Right. Who is John and Doe? John and Doe are both receivables. So what we do is that we debit Doe, credit John. 50 each. Okay. 3. Discount allowed of 20 recorded as a debit in the discount received account. So this shouldn't be a discount received. So what we need to do is that we do a credit in the discount received and we debit the discount allowed. Right. Now, it will take you a bit of time to master the correcting entries. So while you're preparing for the exams, you might want to go through a bit of this from day to day so that you gain more confidence and familiarity in this topic. Okay, 4. Sales and cost of sales were overstated by 120. So that's quite simple. Debit sales, credit your cost of sales to reduce the 120. Right, so what you do is that you debit sales, 120, credit cost of sales, 120. Now, the fifth item is quite unique. The fifth item is a complete reversal. So when you perform a correction on this, the amount has to be doubled. Now, if you're not too sure and you're meeting me for consultation later on, you can ask me more about this. Otherwise, for complete reversal, usually we take double the amount to rectify the error. So in this case, double of 25 is 50. So you credit interest income 50, debit cash at bank 50. Yeah, like this. Now, you don't really have to worry about the computation at 25 times 2 because in the exams, more likely you'll be asked to select the correct double entry instead of having to show the computation. 6. Purchase of a copier 250 recorded as printing expenses. What do? Credit the printing expense, debit the copier. Yeah, that's about it. It's not very difficult, but then you do need some time to practice this to have that confidence and familiarity. It's a bit difficult to memorize this because there are too many varieties of this correction errors. You may, work through those that you find in the revision kit. That will give you sufficient practice. Okay, going on. You notice that I skipped one question. The question was effect of errors on the profits. You may want to examine this. If you're meeting me for consultation, then you can also check with me how to derive the answer for this question. State the effect of errors on the profits of business, right? Okay, going on. Final accounts. Do you remember the term final accounts? Final accounts also refers to statement of profit or loss and the statement of financial position, right? What do you need to watch for? Okay, make sure you know how to prepare the statement of profit or loss because the question may give you some figures and you need to compute what is the profit, or maybe you need to compute what is the gross profit. The cost of sales is typically derived by taking opening stock plus purchase minus closing stock plus carriage inwards. But the carriage outwards, you need to be careful. The carriage outwards is an expense. They are different, okay? They're very different. Right, some questions I came across and from the specimen paper, some questions will tell you that we have a balance of 5,000 expenses, but we also have a credit balance for revenue of 4,000. What does that mean? It means that you have losses of 1,000. Why? 5,000 minus 4 gives you 1,000. So it's a loss of 1,000. Right? Now, the reverse is also true. If, let's say, you have credit of 5,000 and debit of 4,000, I'll give you a profit. So the credit is the revenue, the debit is the expense. Right? Take note of that. Okay. Of course, I already have written the solution here. Okay, at 31st December, trial balance showed expenses with debit balance of 20,000. Revenue had credit balances of 25,000. So the profit therefore is 25 minus 20. So that's profit of 5,000. That's quite simple. Okay, occasionally you'll see questions that actually would ask you to calculate what is the current assets, current liabilities, or equity. You see questions like this. Right, so take note, current assets specifically includes receivable, cash, inventory, and prepaid expenses. Whereas the non-current liability includes any amounts that you need to pay in more than 12 months' time. Typically, it would be like your mortgage, term loan. Current liabilities will be those that you need to pay in 12 months. They could be like your payables. They can be like your expenses still owing. The accounting equation is frequently featured in the exams. Usually, you will find one question out of 50 that requires you to apply the accounting equation, right? To find, for example, the missing equity. Or maybe you may be asked to calculate net assets. Equity is also known as net assets. Beware, they are the same thing, right? So capital is equity. Equity is also net assets. Okay, good. Okay, so here we are. Okay. Incomplete records. Another topic that we did, I think was it like the last few lessons we went through incomplete records, and the incomplete records was not very difficult, but involved a variety of techniques. One was that you need to know how to use your accounting equation to find the missing capital. A minus L gets capital. Some questions require you to find missing sales, missing purchases. Now, I've told many students that to find the missing sales and purchases, there are two ways. One is that you prepare the control account, right? Or if not, if you are trying to find the missing expenses, you also can prepare ET account. Alternatively, you could, not written here, alternatively, you could use addition subtraction to find the missing sales or the missing expenses. You don't necessarily have to prepare the control T account, right? But for those of you who are not too familiar, the T account actually is far easier to apply because it's less confusing compared with doing addition and subtraction. One more, and this is frequently confused, margin and markup. Now beware, margin is GP divided by sales, whereas markup is GP over cost of sales. They are different. Now sometimes you see the term net sales are being used. Net sales refers to sales minus sale returns. That's net sales. All right, and other terms, I don't think you really see this term called cost of goods sold. That's quite uncommon. Most of the time you see the term cost of sales instead. Okay, good. Take note of the formula, don't forget now. The margin and the markup formula, they are very important. Okay, take note of these two. Okay, let's move on. Okay, now for the incomplete records, the accounting equation, there are two varieties. One is the asset equals liability plus equity. That's one version. Version 2 is ending capital equals to opening plus profit minus drawing plus additional capital. This is regularly tested. Beware. This second version is regularly tested, especially to find missing profit. Now, if you take 1 and 2 and you combine them, you actually get 3. 3 is total asset equals to total liability plus equity plus profit minus drawing plus additional capital. Right. So need to memorize this. This is frequently tested. When it's tested, it's quite easy to solve. It's not difficult. Okay. Yeah. Okay, so let's go on. So as mentioned, the usual things that you need to find will be like sales, purchases, and cost of sales. These are very common. And for the expenses, main thing will be the accrual and prepayment, right? Do you remember the margin markup formula? I told you, memorize that. Very important. Okay. Okay, very good. So you have survived so far, right? Just a few more pages. I think it's just like another 10 over pages. Then let me spend a few moments to point to you a few other questions that I didn't go through in class. I think they are important for you to know. Okay, partnership. For partnership, we need to be familiar with how to prepare the control account. The differences are quite self-explanatory. Let's go straight to the calculation. This is the very important part in partnership. The sharing of profits. Typically, how does a partnership share profits among the partners? Profits are shared by preparing this thing called a appropriation account. Do you need to literally prepare like this in exam? Not necessary. Your exam will more likely ask you for specific figures like what is the residue profit. Or the exam question may prompt you to calculate what is the total profit given to partner A. Or maybe to calculate the profit allocated to partner A, for instance. Right, so questions like this, which basically means that you still need to know the entire format, just that you don't need to reproduce this in the exam. That's the fortunate part. Okay, so profits add interest on drawings, and the amount minus the interest on capital. From experience and also from observing the revision key questions, it seems like this interest on capital is frequently given, so there is no need to calculate this. Very little need to calculate this. The share of profit, you need to watch for the ratio. The ratio usually is quite common. They will tend to be what examples are equal share or ratio of 3 to 2 or 1 to 2, for example. Okay, additional term. This amount that you find here is known as residue profit, right? Now, residue profit is basically remaining after you take net profit minus interest on drawing, add interest on drawing, minus interest on capital, minus salary. That's the residue profit. Okay, good. Let's go on. Now, the next part now, which, that may affect some students, is the current account. Now, the current account is important because that is to calculate what is the closing balance for the first partner or the second partner, or for the partner concerned. This occurs regularly. You need to know. Now, the current account is by default a positive. Take note, the current account has an extra item called drawings. It's different from appropriation account. The appropriation account has interest and drawings, but doesn't have drawings. Beware. Both current account and capital account makes up the equity of the statement of financial position. The current account by default has a credit balance, which is positive balance. Okay, can you just take note of that? Very important. So there are these two things that you need to know very well. They are appropriation account and the other is the current account. Okay. You notice that I use plus minus instead of the T format that you saw in lecture notes, right? In fact, your exam does not require you to reproduce the T format. You can perform the working in any way you like, so long as you can provide and select the correct option in the multiple choice, or fill up the correct number in the fill in the blanks. So as such, there's no need to prepare the T format for the current account. Okay, what's goodwill? Goodwill basically arises because you pay more for the net assets of the business, right? The price paid for the business is greater. So take, for example, you paid 2,005, but the net assets are 2,000. The difference of 500 is the goodwill, right? Now, be careful of how to record this in the capital account. Right, we went through this the last lesson, but I think it can be a bit confusing for some of you still, right? Do clarify with me when you meet me face to face. Admission. When you have new partners, how do you record the change in goodwill? How to record the interest in capital and salary? Because during the year when you have new partner, there'll be a change in partnership agreement, especially regarding the interest on capital, salary, and share profits and losses, right? And this is a confusing calculation in my opinion, especially when the change in partnership is in the middle of the year rather than at year end. That can be confusing. Okay, accounting standards. Now, the main thing to take note of would be like the characteristics of your financial statements. What are characteristics of statements? Reliability, verifiability, and accuracy, right? You remember that? Now, for your purpose, you don't need to know contingent liability and assets. You just have to know the provisions. Okay. All right, so the qualities, relevance, faithful representation, that's the fundamental qualities. The others will be the enhancing qualities. Yeah, that's about it. Would you need to know how to define these? Well, I hope that you would. But you could actually, in a way, guess what is the meaning of these qualities. But I think it's more important to remember what are the qualities under the two categories A and B, right? That is impossible to guess. Okay. Okay. Provision. Although I indicated here three different items, but you only need to know provisions. Provisions refers to a liability of uncertain timing and amount. Uh, a typical example of a provision would be provision for warranty. If you're Samsung, you sell mobile phones. Mobile phones that are sold comes with warranty, which means that Samsung has an obligation to rectify the defects on the mobile phone if there are any. That's obligation. And rectifying the defects is not free. It will result in outflow of economic resources, in short, money. And can we measure how much Samsung needs to pay to rectify all those defective phones? Well, they could, because with experience, you can more or less tell how much you need to pay to rectify all those faulty phones, phones with issues, right? I don't think this will be tested extensively. Probably just make sure you know the uh, definitions and the points here. Okay, and we'll skip this. It's not that important. You can read through it. Right after all, you have the OneNote link. Right, that's for your info. Current assets. Oh, sorry, contingent assets. Not too important. You can read through that for your own purpose. Not that critical. All right, good. So we have made it to the end. Okay, so that's quite a bit of a revision, right? But bear in mind that's not a thorough, detailed revision. So I merely picked up some of the major things that you need to watch for. Right, you will still need to go through the mock exam paper. Right, so basically there are those of you who attended my class, you had two mock papers. There was a pre-mock and a closed mock. Make sure you attempt those. The specimen paper on the ACCA website, that's very important. You need to attempt that. If you have not attempted, I would suggest that you should attempt this before you meet me for consultation on the coming Wednesday. Right. And frequently a lot of people ask me, do I need to read the textbook? Don't bother reading the textbook. We have no time to read the textbook. Right? Go straight to the specimen paper, understand where your weaknesses are. According to the students from the previous intake, they gave this feedback, and I would tend to agree with them about this. They complained that there are a lot of these languages that they didn't understand. I suspect that some of them could be like expenses in arrears. You are used to the term accrued expenses. Expenses in arrears are simply expenses accrued or expenses yet to be paid. So there are quite a few different names, but they all refer to the same thing. Revenues received in advance are current liabilities. Don't confuse them as current assets. They are totally different. Okay, final point. So the specimen paper and the mock paper, both closed mock and open mock, must be attempted before the exams. The consultation will take place in the coming few days. So do let me know, or rather you can just drop by, you can just drop me an email to say that you're coming by, right? So there are not that many of you in the class, so you can just drop by and meet me for consultation. I'll suggest that you make full advantage of the consultation so that you have greater confidence in clearing the exams. The exams, I'd like to add, maybe to overstate the difficulty, the exams will be challenging, so don't scheme on the revision. The common weaknesses among many students is there's a lack of practice of the questions from the revision kit. You need to practice them. Besides, you already have my link, my OneNote link. These tutorials actually come with all of the questions previously that we went through, right? You may actually go through these, and I highly recommend that you go through all these questions. There are quite a lot of these here, right? You can go through them, right? They are always available on OneNote. Okay, good. So let's come back to the reminder here. Then we can look at a few questions before we wrap up. Okay, So coming back to the earlier point, right? So as you practice the mock exam paper and the specimen paper, ensure that you could achieve completion in 2 hours. That's very important. If you can't, you run a very high risk of failing. Now, some students will tell me that uh, they have to take more time to interpret a question. I understand that. Now, if you have to take more time to interpret a question, you can only spare 2 minutes, and that's all that you can spare. That's all you can spare, Right? Don't overspend time. When we had the specimen paper, or rather, when we had the mock exam in school, quite a number of students did actually exceed the 2 minute per question, right? And that resulted in them not being able to complete the paper. Right? You need to overcome this weakness, right? From the 10 over, I think was it 10 or 20 students, was it 15 students that took the mock paper? Roughly 5 managed to finish ahead of time. The rest had problems finishing on time, right? So that tells you how important it is to keep to this timing. All right, let's come to the specimen paper. Now, unfortunately, I can't go through with you all of them all at once. I will have to pick a few that I think is of interest. You notice that I've already written all the comments in this in the paper. The reason is because previously I also have taught this to another group of students. Okay, let me pick a few to discuss with you then. If you are coming to meet me on the coming Wednesday, then we'll discuss more. All right. This was a very recent topic that we did, question 31. Right. I would suggest that you go back and revise this. It's still quite recent. Okay. Now you notice that for this question 31, I had a very interesting presentation. If you refer to my workings on the right. What I did was that my capital account was vertical style instead of the traditional T style. Right, a bit different. You might want to look at this and then examine how I did this. Right, and then you can discuss me when you meet me in person. It will take you a bit of time to digest how this question 31 is done. Okay, that's your homework 31. Okay, let's come to 32. How should expenses be accounted for, or how should discounts which are allowed to customers for early settlement be treated in statement of profit or loss be? How should you treat that? Now it's treated as an expense. Discounts given to customers are expense. If it is for early settlement, what's early settlement? Early settlement means the customer pay earlier and ahead of time. That means the customer did not delay payment, they paid soon. Now this discount is also known as a, do you remember the term? It's also known as a cash discount. Right, it's also a cash discount. Now let me prompt you this. Then in this case, then what is a trade discount? Does a trade discount need to be deducted from gross profit? Does a trade discount need to be included in cost of sales? Does a trade discount need to be deducted from sales? Does a trade discount need to be shown as a deduction from the value of discount received? Now, just to refresh you, the trade discount simply refers to a discount given on purchase of goods, which means that, okay, and it's not just on purchase of goods, but also sale of goods. So basically, it is C. Right? If you have a sale of goods to customers, that trade discount is immediately deducted from sale of goods if you have a trade discount. Now, if you bought from suppliers and then suppliers gave you a trade discount, then it would be a deduction from the value of the purchases. Right? If you are given a trade discount by the suppliers, then it will be a deduction from the value of purchases. Okay, view of that. Okay, next. 33 is quite interesting. 33 is another example of a correction of errors question. Yeah, a bit of correction of errors. A bit of, oh yes, doubtful debts. Doubtful debts. Yeah, I didn't show you an example of how this is done. So let me use this as an example to illustrate how to do this. Why is it that the answer for 33 is $87,074? Why would that be the case? Right, take a moment to determine what do you think the how I gotten the answer. It's really quite simple. It's nothing too complicated. Right. Okay. Have you found it? Have you found it? Okay. Okay. So the question is quite simple. Yeah, it is really quite simple. So basically what you need to do, if you refer to the model solution, 90,350 minus 1950. Why do you need minus 1950? Because it says irrecoverable balance is to be written off. What do you mean by is to be written off? It means that it has yet to be deducted. Has not been deducted. So what do? 90350 minus 1950. You must minus first. Now, next thing. Then you will say, how about the allowance for doubtful debts? Oh no. Now, the trick here is that if you were to take 90350 minus 1950, what is this supposed to tell you? 90350 minus 1950, and the question tells you the allowance is to be adjusted to 1.5% of the remaining balance. This is the remaining balance. How much is remaining balance? Remaining balance is 8840. 88400. Then you take that, multiply by 1.5%. Right, multiply by 1.5%. So that gives you 1326. You get 1326. Okay, so what is the amount to be shown in the statement of financial position? Okay, follow me. 90350 minus 1950, and then minus again, what number? Okay, 90350 minus 1950 minus 1326. Right, so 90350 minus 1950 minus 1326. Now then you will ask, how about this one? What happened to this 2490? The answer is that's unimportant. Yes, that's unimportant. Why? Because this amount was brought forward, was from last year. And the allowance for doubtful debt that applies to you is the 1.5%. It's no longer this one. This is no longer applicable. Right. So that's why you notice that I didn't even mention about taking the 2490. Right. So to get the amount to show in the SOFP, 90350 minus 1950 minus the allowance for doubtful debts. That's it. Hey, then how about the 1320? That's bad debt written off the last year. It was last year's event, so it doesn't affect this year. It has no bearing. Okay. You see this from time to time, and I think some other variety of question 33 would be questions that ask you for some other versions I saw was calculate what is the net receivable in the statement of financial position. So some questions would instead tell you to calculate the net receivable, which simply is the same thing as the requirement here. Okay. Going on. Okay. That's 33. The rest seems quite fine. I like to define this, and I think that's important to define as 36. 36. You get a lot of questions like this on partnership. Usually the partnership questions will tend to test on what is the profit, what's the residue profit, stuff like that, right? Okay. How would you calculate the profit that Louis is entitled to? Now, this is the type of question which I have told you that even though the question asks for one partner, it also means that you need to prepare the entire what account? Appropriation account that you saw in the revision slides. You still need to prepare the entire operation account. But fortunately, you can just use addition subtraction to calculate the profit that is given to the partner instead of preparing the entire appropriation account. Right. Now, the answer for this is 36 is C. Right, is C. Now, how would you get the answer? Now, of course, one way is that you prepare the appropriation account. Now, the other, which I'm going to share with you, is to use a shortcut. A shortcut. You calculate the residue profit first. That means without preparing the entire appropriation account. You take the residue profit. How do you get that? You take the profit 500 minus the salaries of the partner, right? Minus the salaries of the partner, which is 7, 5, what? Wait a minute. Minus the salaries. Oh, wait a minute. Only David gets salary. David got salary of 9,000. Yeah, 9,000. All right, so like this. Then next, you minus the interest on capital. Now, this case, the question didn't give you the interest on capital. You need to calculate yourself. 8% of 75,000, 8% times 60,000, 75,000, then minus another 8% times 60,000. So that's what you need to do. You notice that I didn't even use the appropriation account format because the format isn't important. The main thing is the calculation. Right? The format is useful if, let's say, you're not too sure, then you can use the format to guide your workings. Okay, this should result in a residue profit of 38,700. Right, 38,700. Once you get 38,700, what do you need to do next? Then that's where you need to calculate how much of it belongs to Louis. Louis is entitled to 3/5. Right, Louis is entitled to 3/5 of the 3,700. Okay. But Lois not only is entitled to 3/5, Lois is also entitled to the interest on capital. How much is the interest on capital that Lois should get? 75,000 times 8%. 75,000 times 8%. Right? So that tells you how much profit that Lois is entitled to. So in short, this profit refers to share of profits, also refers to interest on capital. But Lois doesn't have salary, so there is no salary to add for Lois. Right? That's it. Right? So that's what we mean by total profit. There are these terms that you need to be careful of. So what is total profit again? It's whatever profits, like interest on drawings. No, not interest on drawing. Interest on capital, share profit given to the partner. So essentially, the total profit formula to partner must comprise of interest on what? Capital plus salary plus the share of profit. So it essentially works out to be like this. The total profit to partner should be equals to interest on capital plus salary plus share of profits. Right. Of course, depending on question, sometimes questions may not give you salary, so then the salary is missing. It's fine. Okay. Can be quite a simple question if you are, you just have to be very quick to solve these questions. They shouldn't take too much time. 37 is a giveaway. It's so straightforward. 38 was the question that I told you about earlier on. Calculate the gain or loss on disposal of old van. How do you calculate gain or loss on disposal of old van? What we do is that we compare two numbers. Sale proceeds versus the carrying amount. Sale proceeds is, in this case, can you find it? Why is it 6,005? Basically, what I did was that Fred bought a new van for 9,000, but Fred only paid 2,005 for it, which meant that the dealer had given 6,005 as the trade-in value for the van. TI as in trade-in value 6,005. So you take the trade-in, which is the so-called sale proceeds, match against or compare against the carrying value. How do we determine the carrying value? Simple. We take the cost minus the depreciation. That gives us a carrying amount of 4,850. So, but you happen to get back 6,005. Compared to the carrying amount, what does it imply? It implies that there is a profit or gain on disposal of 6,005 minus 4,850, which is 1,650. Quite simple, I know. Right. Of course, you know what? The trick here is that you need to know that this implies trade-in of 6,005. It's not very obvious, but as you practice more, it should become more obvious to you. Okay. All right. So we are coming to the end. Yeah. Another example of capital expenditure. See, this is very similar to the one that I told you about. Right. What is the total capital expenditure? It's basically the equipment cost plus the delivery. Maintenance, sales tax, they are regarded as revenue expenditure. We don't care about them. Right. So 39,800 plus 1,001 gives you 4,900. Okay, there is also reconciliation that I would suggest, I highly recommend that you try this out. If you're meeting me for face-to-face, then do try this out before we meet. Okay, good. I think we are about done already. And this is another question. Calculate the gross profit. What must you do? You need to take the sales and you must calculate the cost of sales. How do we get the cost of sales? Opening inventory plus the purchase minus the 6,004 of closing inventory. And then there's carriage inwards, right? So you need to do that. You need to find the cost of sales before you minus against sales to get the GP, right? So this is a very simple question, 42. 43. 43 is a bit unusual, right? And then here you see the term extended trial balance. So it says that into which columns would the result be entered, right? So do approach me regarding this, right? There are some specific things to understand in order to answer this question. If you remember reading the lecture notes, you realize the lecture notes had included a huge spreadsheet, and then you need to fill in the blanks. But interestingly, come to this question, you don't have the huge spreadsheet, and you still can be tested on the extended trial balance. So you understand, for the extended trial balance, you won't be tested so intensively, not like what you have read from the lecture notes. So, yeah, right. Do approach me, when you see me face to face to discuss this question 43. 44 is a very interesting trick question. As you can see here, it's on the accounting concepts, going concern, and there was matching concept, there was prudence, there was consistency, accounting period, entity concept. Right. Financial statements must always be prepared on going concern basis. Of course, it is. Now, going concern basically is an assumption that the business will survive into the foreseeable future, which is usually a year ahead. If a business is not going concern, you should not prepare the financial statements. Now, the answer is, whether going concern or not, you still have to prepare the financial statements, right? So you will say that, I read the notes, but I didn't see this. Well, the thing is that you must have tried, then you come across all these unusual questions, right? And then you will be more prepared to answer questions of this type. So in this case, the answer is 1, okay? A, 1 only. 45 was something that we did, I think, in the very early part of the course, right? I can't remember when it was, but a very early part of the course. So quite easy. Overdraft is a current liability. But in this case, if you observe, the bank loan will only be repaid from February X5 onwards, which means that compared with today's date of 30th November X3, that's more than a year later. So therefore, it must be D, current liability and non-current. Right. So you get some rather not complicated, not difficult questions, right? Right. And I think the rest I'll leave you to try it out. You can see that again. The last question is also on accounting concept. Okay, so we have come to the end of the revision, right? So basically, you notice that the key to succeeding in the exams, right? The key to it is really to focus intensively on practicing as many of the multiple choice as you can. If you attended my class, then you have already attempted quite a huge variety of multiple choice, right? And your near immediate questions that you must practice would be the mock paper, the pre-mock and the close mock specimen paper, the one that is on the ACCA website. Make sure that you try that out. And I'll see you very soon on the coming face-to-face session. Right. So that's essentially what you need to do to prepare yourself. Right. So after I end this presentation, you may feel free to go through the slides, just to make sure that you understand the core concepts. And then make sure they complete these few things. The revision kit you might not be able to finish because I think there were like 400-500 questions. It's too much to complete within 10 days. So you want to make sure that you complete the specimen, the mock paper, which is a minimum for you to have a good chance at the exams. Okay, so we have come to the end of the presentation, and apologies for using this makeshift way of doing the presentation. Right, I wanted to use the Hangout, the Google Hangout, which will give a much better resolution. But so this is really just a last minute resort. Okay, so do take those advice that I've given you and then start to practice. I'll see you very soon on the coming Wednesday. I mean, if you're coming down, I would highly recommend that you come down and have your questions answered. And if you have any other questions you can drop me an email. I'll reply to you as well. Okay, in the meantime, if I do not hear from you, wishing you all the best for the coming exams. And do not leave questions unanswered. Very lousy advice that I normally give students is, if you're not too sure about the answer and you really do not know what answer to pick, just toss a coin. If you really can't, just toss a coin. And for all you know, you might be very lucky that day. Right? Of course, I hope that you do not need to toss a coin when you come to questions that you can't do. Right? I hope that you are able to attempt most of the questions. Right? In fact, all of the questions if you can. All right. So certain topics that might be a bit too difficult to cope, and as I mentioned just now, at the reconciliation for control account, you might leave it to the very end, and before you revise on that. It may not give you very good marks. You might not be able to get very good marks, even though you know the reconciliation process. Right. Just focus more heavily on the usual bread and butter topics. Right. The usual bread and butter topics would be like double entry, accrued prepayment, bad and doubtful debts, depreciation, valuation of inventory. These are the usual ones that are very easy to master and very easy to practice. Bank reconciliation, correction of errors, and so on. Right? And your one, formulas are not given. Make sure that you memorize your formulas as best as you can. Okay. So thank you for spending that past 2 over hours and watching through this presentation. I'm quite amazed that there are these few of you that actually stayed throughout. So yep, and we'll meet soon. Thank you for watching. Right, and yeah, I'll hear from you soon. Have a great day. Yeah. And meantime, if you happen to need the exam papers, the mock paper, if you need the link, just drop me an email. Right. So I'll hear from you and have a good night. Rest. All the best for your exams. Thank you.